I think we're all ready to start. So I open this meeting and welcome you all, both the shareholders and the stakeholders and guests too. This meeting is going out live via the website and the Twitter account of DSM, so I'd like to welcome all those who are following the meeting via those channels. Also welcome to Mr. van Versten and his colleagues from KPMG, our external auditor. To comply with the Corporate Governance Code, the external auditor is present here today. When we get to point 4, that's the adoption of the financial statements 2015, so that he can answer any questions that you might have relative to the accuracy of said statements. He'll also give an explanation. Now, behind me, we have the members of the Supervisory Board. That's Ms. Van Meer-Moore, Ms. Kennedy, Ms. Haynes, and Messrs. Kist, Hochuli, and De Zwaan. On the front row, we have the members of the Managing Board, Ms. Matchett, and Messrs. Siebesmith and de Vries. On my right is Ms. Van Broek, who is the Secretary of the company, who will be taking the minutes of this meeting. You will have been able to consult the agenda with explanatory notes and other documents. They were published on 17 March 2016 on our website. The registration date was Friday, 1 April 2016, compliant with the date fixed by law, namely exactly 28 days before this meeting. I take note that the invitation to this meeting has been done in accordance with the legal and statutory provisions, and that this meeting is competent to take lawful decisions. You will have also seen that DSM took the decision to withdraw agenda item number 12. That's the intended amendment of the Articles of Association. We won't deal with that point on the agenda. Finally, I'd like to welcome our notary, Ms. Lijmreizer. Seeing as she is an independent third party, you will have been able to give her a proxy or voting instructions before this meeting. This meeting will be held in accordance with the legal and statutory regulations, as she will see. A few other points. The main language of this meeting is Dutch. There's going to be simultaneous interpretation from English into Dutch and vice versa. Should you wish, you can certainly ask us questions in English. Ms. Matchett and Ms. Tanda will always answer in English. I would suggest, as is usual, that when we get to the different agenda points, that each speaker has the right to pose 3 questions maximum in the first round. Of course, we can ask other questions later on. There'll be a second and following round if that's necessary. We've got an electronic voting system, and the secretary will explain how that works and will be running the voting proceedings. Would you be so kind as to turn your mobile phones off? Please check out where the emergency exits are. You can see the green signs to them. And should we have to leave the room, please follow the indications of our colleagues. During this meeting in the hall, you can get coffee, tea, and drinks. And there's also a television screen with sound in that hall. Please don't bring any drinks inside the auditorium. After Mr. Siebesma's introduction, I'll tell you what percentage of subscribed capital is present here and is liable to vote. So now we come to item number 2 of the agenda. That's the annual report for 2015 by the Managing Board. Mr. Siebesma, Chair of the Managing Board, will give some explanations on the yearly report of the Managing Board. You can find that on pages 12 through 63 of the Annual Report 2015. After that, you will have the opportunity to ask some questions or make some comments about their report and the report of the Supervisory Board, the implementation of the Dutch Corporate Governance Code, and the sustainability information, all of which is in the Annual Report. The implementation of the remuneration policy of the Managing Board and reserve and dividend policy will be dealt with under agenda points 3 and 5 respectively. Before I give the floor to Mr. Siebesma, we're going to show you a very short film which gives you an idea of what kind of diverse products DSM sells.
Hi, I am Tim, and I'd like to talk to you about DSM. DSM is a global science-based company situated in 50 countries on 6 continents. In the next 3 minutes, we'll have a closer look at DSM's activities in nutrition, health, and materials. DSM has the broadest portfolio of nutritional ingredients in the world. The company is the leading innovator in the nutrition market and is the world's largest supplier of vitamins. This one? There you go.
Thank you.
DSM helps to make better infant nutrition and better processed foods. We produce ingredients for yogurts, cheese, beverages, soups and sauces, alcoholic beverages, baking products, as well as dietary supplements. DSM also creates packaging to protect food products and to give them a longer shelf life. And DSM is the largest producer of nutritional food additives for healthy animals to produce the highest quality of meat, fish, dairy products, and eggs. By the way, not just for farm animals, DSM also produces for a man's best friend. DSM's activities are not only about what we eat or drink, but also how we take care of our body, with ingredients for products such as sun, hair, and skin care. DSM also develops biomedical materials, materials that can be used in the human body to strengthen or replace body parts and accurately deliver medicines. Millions of people already have DSM's biomaterials in their body. Oh, thank you. In their knees, in their hips, and in their spinal discs. DSM's innovations make materials lighter, healthier, safer, stronger, more durable, and have a lower environmental footprint.
You can find DSM's materials, like advanced plastics, in tablets and in smartphones, and even in cars.
Which does not only make them lighter, but also safer, more fuel efficient, and even more fun to drive. And in case you didn't know, DSM also happens to produce the strongest, most durable lightweight fiber in the world. It is used to make products such as cut-resistant gloves, protected clothing, and cables that lift the heaviest loads. Sustainability is a core value for DSM, not just in its own operations, but also in products and services for customers. DSM's sustainable innovations in materials can be found in anti-reflective coatings for solar panels, and also in paint and coatings that have less impact on the environment and are more durable. DSM also helps to make carpets completely recyclable. DSM's biotechnology finds further solutions by making products from renewable resources and by developing the technology behind advanced biofuels. DSM keeps innovating and improving their products for and with the customers, for people today and generations to come.
Is toch geweldig dat DSM over.
Isn't that amazing? We're absolutely everywhere. Here, elsewhere, inside the body, outside the body. So welcome, everybody. Thank you so much for having taken the time to come to this general meeting of shareholders. So many of you have come, and a special word of welcome to Ms. Koningsman. I haven't been able to shake your hand, Mrs. Koningsman. Where are you? Over there. You were 90 this week, weren't you? It was your birthday. Congratulations. A warm round of applause for this. Doubtless you are the oldest shareholder here present today, and also a very faithful participant in our annual general meetings. And welcome to you all as well. Thanks very much for being here in our HQ in Heerlen. As Chairman said, you had an overview of what DSM does and can do inside your body and outside your body. And those of you will have been able to see more about our products who were on the trip today, can see more of what we do and how we do it. Now, I'm going to give you a short overview of what we did over the last 12 months. A lot happened inside and outside the company, which have influenced the company. The first point, I'm not too sure, but you know, the Netherlands is not going to be in Paris in the European Football Cup. We weep, of course, for that. But other things happened last year. The economy is sort of evening out. The Swiss franc unexpectedly appreciated sharply. And then, of course, there was the earthquake in Nepal, the immigration crisis, the attacks that we had in Brussels and in Paris. Although a sunny point was the climate conference that took place in Paris, which also impacts on what we do. I want to run through a number of different items here and subjects. How we created our portfolio, how things are going, how they worked out in 2015, and what we think about our strategy 2018. We don't really know how the whole year will be going, but we do know about Q1, and we've had good results for the first quarter. Now, DSM, you can see on the right, you can see what we do these days. And people such as Mrs. Koningsman, who've been here year in and year out, will doubtless be able to very well recall what they see in 1995. All those different things that we did. We were a wholly different company. We were petrochemicals, we were engineering, we were really very different. And bit by bit we have changed. And in 2015 we sold the last part of bulk chemicals, and then we had a joint venture with CVC. So in other words, everything has changed bit by bit, and nutrition has become a very important component of our company, and also materials as well, especially with the high value materials. Now, an overview that you can see about nutrition and materials, what we've been doing. So we've got nutritional agreements for animals, food and feed, biggest in the world actually. And not only your pets, that's a small business for us, but also chickens, poultry and pigs, and also salmon. All animals that are farmed and eat, we look after them. And then we've also got human nutrition, specialties as well. And also personal care. More than 5 billion turnover in that. And look at materials there. Well, we've got engineering plastics for the car, for the electronics industry, trying to make it greener. Dyneema, the strongest fiber in the world, and also resins and functional materials. That's ingredients to make paint water-based and much more ecological. We are busy throughout the world. You can see in the pie chart on the left where we are. You can actually see that the smallest segment is the Netherlands, just about. Our HQ is here, but we don't really sell a great deal in the Netherlands, but we are big in China, we're big in North America. And what we've managed to do is, over the last years, we've been able to distribute our sales throughout the countries, and also specifically in the fast-growing economies. 45% of our sales is there. We're very happy with what we're doing. and we're not going to change this. We think it's very important to have a broad distribution of sales. And you can also see where you can find our products as well. Many of you use our products on a daily basis. And of course, it's a good thing. I'm sure you enjoy using them. But many of our products are ingredients in the products that you buy. Now, you probably wouldn't be aware of this, but that is indeed the case. Now, over and above the businesses which I've just highlighted, we've got three other parts of DSM that you won't find in the figures. Really, you have to look in the profits and loss and drill down in order to find them, because you won't find these figures elsewhere. These are three sizable joint ventures which haven't been consolidated. One with the Chinese, that's Sinochem, pharmaceuticals, anti-infectives, antibiotics, and then there's Patheon together with them. That was previously DPP, our pharmaceutical activities. And we've got JLL, who's also a partner, private equity partner from America, who's also there. And then we've got CVC, Capital Partners in a joint venture. That's for caprolactam. So we've got a different percentage of all these companies. And when you see the part of DSM in these three joint ventures and how much that's worth, well, I'd have to say a bit 250 million euros, more or less. Obviously, we're going to look for exit possibilities one day, and you have to possibly give a multiple to the 250 million, but I don't really want to do that now. It's very difficult to work out what it is, or of course this money that's flowing from this is reinvested in DSM, so it brings us all good. If we drill down now on the broad portfolio, if you look at nutrition, well, we've got a lot of different things there. Vitamins, very important there. Fatty acids as well, very important. Because to replace salt, fat, and sugar is absolutely key in nutrition today. And you can see the profit contribution per product line. You can see the top 10 products represent a little less than 40% of the nutrition profit in 2015. You can see the smallest part of the camembert here is really small, but all of them contribute to our profit. We have a very broad portfolio here as well. It wasn't always the case in 2015. We were talking about vitamin E for most of the year. Why? Well, it was a really big part of what we did in the past regarding vitamins. Well, we aren't making so much profit on vitamin E. That's true. It's not such good news. But as Kruif said, every disadvantage has its advantage. So we're not as vulnerable as we were in the past because we've got a broader portfolio. And that's really important. Now, what are we doing with nutrition? Well, nutrition, we've got feed ingredients, animal nutrition, you can see on the left. We've got a number of additives and supplements to make that food better. The only thing that we don't make, but we buy in, are amino acids. We make the rest, as you can see on the right-hand part of that pie chart. And we're thinking of forward solutions. We are packing the products in exactly right size and the right formula so they work perfectly for the end application. And what is the end application? Well, you can see poultry, ruminants, swine, pet, and aqua. Yes. Faker has problem remembering what pets are in Dutch, but comes good in the end. So, all these are specific problems for specific applications because, of course, a ruminant really eats and grows at a different speed and fashion than a pig. And essentially, if they get the right stuff, they grow better, get sick less often, and produce less wastage. Human nutrition, you can read, is leading in nutritional ingredients. You can see the special food ingredients market, growth by products. We also package all of these for different applications. You can see all imaginable applications on the right of the screen. Now, looking at materials now, the bottom part of the slide, you can see the different segments. We're in engineering plastics, Dyneema, and coating resins. And what we're doing, we are selling, our clients are at the top. We sell to the automotive industry, trying to make cars lighter, because of course that has its impact on fuel consumption and the rest. Electronics, making them greener. And then Dyneema is used in personal protection. And also, if you are a sailor, you will know all about Dyneema ropes. We also sell these products, and we are growing somewhat faster than the actual market is. Why? Because we are supplying some of the products that we are supplying to the market, we are now being able to replace with bigger products and more of them. For example, steel and things like that. And our portfolio is being upgraded constantly. You can see our differentiated approach has led to a more attractive materials portfolio. And if you look at the bottom and the left, you could see there was a whole bunch of different products there, but most of those products have been sold, and now you can see we're moving to products with a much higher market growth. Products to which we can add more value. Solar, biomedical, for example, all of these are moving up the market growth and are becoming really top materials. Innovation Center. Well, over and above materials and nutrition, we've got the Innovation Center. Now, we're doing a whole lot with that. The Chief Innovation Officer is here. There's Mr. Van Leen. And he's really the innovation driver, is making sure that the vision stays focused. And over and above that, he has his own growth cause, the new emerging business areas of DSM. First of all, biomedical. We're all getting older. It's a good thing. And we're all going to be really old, but we're not going to get really old unless, of course, you're Mrs. Koningsman, who's already made it. But we're going to obviously have to have things replaced. You might need your knee redone or your hip redone, and we are looking after that in the biomedical emerging business area. On the right-hand side, you've got advanced surfaces. That's really our solar activities. We're making reflective coatings, or anti-reflective coatings rather, so to ensure that when the sun shines on the solar panels, it's not bouncing back, but it's being absorbed by the solar panels. And in the middle, you see bio-based products and services. And what we're trying to do there is use agricultural waste and transform it into useful products such as biofuels and things like that. It's not very easy, especially not with the oil price going through the floor, but I think one day we will be appreciated. How did we do in 2015? What was finance like? Well, pretty good. Group net sales went up. Thanks to the exchange rate. That had quite a lot of impact. Strong organic growth in nutrition, but you see the problems that we had. Two major impacts, negative impacts. First of all, the lower vitamin E prices and the strengthening of the Swiss franc, which shot up unexpectedly at the beginning of the year. So, Performance Materials continue to show a good result, driven by a number of things, but also benefit from currency changes. We've got a new strategy. Dividend will remain stable. Now, what do the financials look like in figures? Well, you can see continuing operations, 4% up, 2015 compared to 2014. ROCE dropped a little bit because the EBIT went down too slightly, and there were a number of recurrent effects. A return on capital employed is too low. We do think that is too low, and we're going to do our best to increase it in the future. Good cash flow. Here you can see the different divisions. You can see that nutrition had a slight drop in profits, 3% down. It's not what you want, but the impact of the Swiss franc and vitamin E were enormous. Their impact was on that. Those two factors over the last 2 or 3 years were about, I mean, if you quantify it, it was about 400 million euros. So you can imagine. And if you correct these figures for that impact, then we've done very well. But of course, at the end of the day, we had to suffer these headwinds. You know our dividend policy, stable, and preferably rising. We wanted to get out of the cyclical portfolio so that we had a much more stable dividend. And if you look at the last 6 years, I think you can say that indeed it is stable and it is rising. Now, all of that was the strategy that we've had up to 2015. We don't want to live in 2016 with a strategy of 2015. So we've got a new strategy for the next years, the strategy 2018. So we've been really looking about how to move through to 2016 to 2018. It's a rather shorter period than we usually look at. Well, what have we been doing? We've changed our business portfolio enormously. We've sold a lot, we've bought a few things, and we've created a slightly different company. So what we're going to do is sell the joint ventures that you've seen, which we're growing right now. That'll give us cash. And in between times, we're not going to be making any major acquisitions. You can't keep on acquiring. Sooner or later, you have to reckon that you focus on your own organic growth. You can't grow your bottom line always via acquisitions. So we were looking at our own operations and trying to strengthen them. You can see on the left-hand side the different businesses that we've got, the growth drivers there. High growth economies, innovation, sustainability, acquisitions and partnerships. But it's really integration of the acquisitions and partnerships that we've done in the past, focusing on the major trends. You can see on the top in purple, global shifts in digitalization, climate and energy, and health and wellness. Now, we have to look further than 2018. And on the right-hand side, you can see what we hope to have achieved by 2018. Annual EBITDA growth, high single digit. Now, we could argue till the cows come home what high single digit growth is, but I think you have to interpret that in your own fashion. What is a high single digit? And annual ROCE growth, that's return on capital employed, high double digit BPS. Base points, that. It's the way, it's financial terminology. So high double digit BPS means almost a 1 percentage point per year. We want to do that over the next 3 years. And then we're going to cash in our joint ventures, and then we can think about making new acquisitions and new investments after that. How are we going to drive profitable growth? Well, by growing the market, of course. By reducing our own costs and by increasing our performance. And also, we have to be extremely cautious about what we're doing with our investments. Now, we have a number of well-defined programs. You can see our major cost reduction programs here. First of all, we're going to try to save 100 to 125 million worldwide by sell our support functions and services programs. And we're going to try to build things together there. So get rid of and consolidate here. That should save a great deal of money. A nutrition program as well. We've got a lot to do there to see how we can operate more efficiently. There we hope to save between 130 and 150 million euros. Then we also want to make our sales grow faster than the market grows. If we do all of that, we should manage a high single-digit EBITDA growth. You can see how that all works, how we hope to save. Timing of cumulative cost savings, you can see from the mid-graph there. In this particular slide, you can see a breakdown by function, breakdown by cluster, aim of the program, with respect to DSM, worldwide savings in support and staff. And here, how are we going to save in nutrition? In the different areas and segments of nutrition. What are we going to be doing in nutrition? Well, we're one of the major players there. And we have not only a global product portfolio, but we are also very close to local markets with products which are really tailor-made, made to measure. And our competitors, they focus on one product, and we cover pretty much the board. And our aspirations for this, an annual EBITDA growth, high single-digit, ROCE, high double-digit BPS again. And the EBITDA margins over the last years have been dropping because of the problems with Swiss currency and vitamin A down to 16. We want to get EBITDA margins back up to 18 to 20%. Look at animal nutrition now. We can grow faster than the market. The market is growing about 3 to 4% a year, and we think we can much faster than that. And in human nutrition as well, we think we can grow faster here. It's a bit of a challenge here because in the past years we haven't been growing as fast as the market, but we had a number of acquisitions there. Possibly we could have been more focused. Hindsight is a wonderful thing, but this time we are focused, and we saw in the fourth quarter of last year and Q1 this year, things are going well, and we are growing in human nutrition materials. You can see the targets again. And the materials, we also hope to be growing faster than the market, and that because we're also supplying replacement materials to the market. Over and above our direct business and our portfolio, we have our sustainability aspirations. You know full well that we think this is extremely important. And you can see that in our ranking in the Dow Jones Sustainability Index, where over the years we have the gold class. That's the highest possible level. But our products as well, we've got a lot of products which are Eco Plus. What does that mean? Well, they have a much lower ecological footprint than competitive products, and much higher added value for society as a whole than competitive products. Now, we do hope that we can grow from 60% to 65% of that. Greenhouse gas efficiency improvements also improving, and that's CO2 emissions. We've managed to reduce that by 20%. We hope to go even further with that by 2025. Employee satisfaction, you can see the results there. We hope to improve that as well We'd like to be in the top class, in the benchmark class. And safety. Well, 2010 we weren't very happy with that. 2015 we're doing better, but we would really like to halve that by 2020. Now, all these responsibilities that we shoulder in DSM are key issues. And these are issues that you read about in the newspapers. And what are we doing about all the big problems in the world? Things like malnutrition. Well, we play a role in that. And we are also playing an important role, or we see us playing an important role in terms of CO2 emissions. Now, why are we doing this? Well, we are looking at malnutrition and climate change and energy. Why? Because that fits in very well with our product mix and our competencies. We don't know how to solve all the world's problems, but we are experts in nutrition and climate change. So, how do we fight nutrition around the world? What does DSM do for that? We are in a whole raft of partnerships. Of course, the most important one is our partnership with the UNWFP, the World Food Programme, the biggest food programme in the world. And we are helping in that partnership. And we are trying to double the number of beneficiaries to more than 25 million per year. In other words, we are ensuring that people are getting a much healthier nutrition than they had. This is really important. We're looking elsewhere to see if we could get involved with other companies to progress this. We also have rewarding partnerships to compete in the low-carbon economy. We talk here in terms of second-generation biofuels, how to make paint cleaner, cars lighter, solar energy better. We are working in all sorts of different fora to make things better. A number of you may well have seen an important initiative run by the World Bank on carbon pricing, and they asked me to collaborate with Ségolène Royal. That's the French Environment Minister, and a couple of weeks ago we had our first meeting. There you can see on the right, Ban Ki-moon. On the left, you see Feike in the middle and Ségolène Royal on the right. So if I pull it all together, DSM is a broad, deep and global nutrition business. We're one of the biggest in the world. We are well balanced and diversified in terms of portfolio. We're very close to the clients. We know what they want and we make it and sell it to them. Two important sub-objectives, if you like, but we never lose sight on. First of all, we are committed to driving value, a strong balance sheet. We're looking for a better EBITDA, high single digits each year. And once again, ROCE, we want a double-figured base point increase. And a triple-figure basis point increase would be 1%, just to let you into that. So, how did we kick off the year? Q1, well, we had a very good Q1. I think we did extremely well in the first quarter. Group net sales up by 2%, organic growth. Nutrition growed by 6%. Materials, volumes went up, but unfortunately prices went down. Is it a drama? Why did prices go down in materials? Well, because the inputs went down, the commodities. When commodities go down, why did commodities go down? Because the oil price went down. And because of that, it means that the end prices went down. But our margins are improved in materials and in nutrition as well. So we've seen in the Q1 growth in nutrition and materials and better margins. And we've got these 2 cost reduction programs which are on track. And if you then think that we'll be able to have higher prices with lower costs, we're going to make more profits. And then you can see improved by a lot. Group EBITDA up by 19% in the first quarter. Our EBIT, not EBITDA, this is before depreciation and amortization, the EBIT also increased enormously. We're delighted by that. By almost 300 basis points, you will be familiar, that means 3%. So, Q1 is great, but it's only a quarter. And the year has 4 quarters, so far so good. And we have to be cautious because we see that the world economy is not doing so brilliantly. We see what's going on in China, in Brazil, in Russia. So caution is the name of the game. But DSM is on track. Everything that we promised in the past seems to be coming through. We're delivering it. Things looking very positive, and we hope to be able to deliver what we promised. We do that because we've got a team. We've got a team, the managing board and the executive committee. All of the managing board are here, but not all of the managing committee. But I can tell you that it's really a great pleasure for me to work with my colleagues. I don't know whether my wife is watching this video, but I'm very thankful to her as well. But we've got a great team here at DSM. It's great to work together, and I think we're doing the right things at the right time. And of course, all the support of the supervisory board. I'm going to take this opportunity to say to Mr. Kist, Ewald Kist, thanks very much. This is his last AGM. Ewald has really done an enormous amount for DSM, as indeed has done the whole supervisory board. DSM distinguishes itself from a whole raft of other players because we've got science, technology, and everything as being the basis for our products, and allows us to play a role across the world. I don't know whether everybody has seen our movie. Have you seen this? Sign Can Change the World? Great. Quips the CEO. Yeah, then you're really unique, because I believe 5 million people have seen this movie. It's a bit of a viral hit on the internet. So if you've got 3 minutes, you too will be one of the 5 million. Science can change the world. So I'm going to finish with this and a film about a wholly recyclable, if that's the word, carpet. Thank you very much.
In de Verenigde Staten is op luiers na het tapijt de grootste afvalberg.
Dit gebied de Wieden is echt een natuurlandschap en dat kun je niet zomaar zijn gang laten gaan.
Het tapijt wordt zo in elkaar gezet dat de grondstoffen in feite waardeloos worden. Met name de grondstof latex is een grondstof die eigenlijk niet past in tapijt. Die latex zorgt ervoor dat het vulkaniseert, dus dat je het in elkaar bakt en nooit weer uit elkaar krijgt. Dus je moet een alternatief vinden voor die latex. Dat betekent ook dat je het hele tapijtproces aan moet passen. En dan moet je inventief te werk gaan. Het tapijt wordt zo in elkaar gezet dat de grondstoffen in feite waardeloos worden. Met name de grondstof latex is een grondstof die eigenlijk niet past. Ik ben aan dat avontuur begonnen. Ik vind het een hartstikke goed idee en je gaat er steeds meer over. En dan ga je op zoek naar investeerders. Die investeerders die zijn allemaal zeer geïnteresseerd. Als het erop aankomt dat je centen nodig hebt, dan willen ze zien, ja, maar wat heb je al verkocht? En loopt dat proces al? Nee, dat proces loopt nog niet, want dat is nou net waar we de centen voor nodig hebben. Dus dat blijft een verhaal van de kip en het ei. Nou, wat je dan gaat doen, is een extra hypotheek op je huis nemen. Vervolgens ga je een extra hypotheek op het bedrijfspand nemen. Om maar door te kunnen gaan.
Die zijn allemaal zeer geïnteresseerd.
Dus 1 seconde voor 12. Dus 5 voor 12, dus 1 seconde voor 12. En we zaten ook echt in het scenario, ja, om alle schulden te betalen zullen mijn vrouw en ik tot onze 70ste, 75ste moeten werken. Het huis ben je sowieso kwijt. Het bedrijf, we zien wel hoe we daar verder gaan, maar in ieder geval het bedrijf konden we dan doorzetten, maar iedereen op straat zetten. Dus al het personeel wat we hadden, zouden we op straat moeten zetten. En met ons tweeën doorgaan. Dus op dat punt hebben we echt gestaan.
En we zaten ook echt in het scenario, ja, om alle schulden te betalen zullen mijn vrouw en ik tot onze...
Ik heb een presentatie gegeven aan DSM en op dat idee werd ontzettend enthousiast gereageerd. En door DSM werden er een aantal mensen vrijgemaakt om ons te helpen in het ontwikkelen van een lijn. Maar er kwamen allerlei voorbeelden van lijn en die werkten eigenlijk allemaal niet. Totdat op een gegeven moment een medewerker kwam die zei, Chris, probeer deze pot eens. Nou, die pot die probeerden we en dat is ongelooflijk.
Presentatie gegeven aan DSM.
Het werkt.
Op dat idee werd ontzettend enthousiast gereageerd. En door DSM werden er een aantal mensen vrijgemaakt om ons te helpen in het ontwikkelen van een lijn.
En dan word je enthousiast. En dat was nog in de tijd dat het bij ons steeds minder ging, maar je ziet wel zeg maar een einde aan die tunnel. Je ziet dat er, ik heb nu een product, als we dit hebben, dan hebben we eigenlijk zo'n beetje alle problemen opgelost. Dus dat geeft je wel moed. Daar zijn we mee aan de slag gegaan. En de resultaten van dat product die waren ongelooflijk goed.
En dan word je enthousiast. En dat was nog
deze technologie is een revolutie in de tapijtindustrie.
Zeg maar een einde aan die tunnel. Je ziet dat er, ik heb nu een product, als we dit hebben, dan hebben we eigenlijk zo'n beetje alle problemen op.
Er is interesse uit de hele wereld. En dat zijn bedrijven die ook zien dat de wereld niet zo door kan gaan zoals we er nu mee bezig zijn.
Deze technologie is een revolutie in de tapijtindustrie. Er is interesse uit de hele wereld. En dat zijn bedrijven die ook zien dat de wereld niet zo door kan gaan zoals we er nu mee bezig zijn.
Dank aan de heer Siebesma.
Thank you, Mr. Siebesma. Now we can ask questions about item 2 of the agenda. Please use the microphones in the room should you wish to raise a question or make a comment, but please state your name very clearly and, if relevant, the organization that you may be representing. Who can I give the floor? Thank you. First of all, I would like to congratulate you with the annual report. Your name, please. My name is Dekker of the VEB, the Association of Stockholders. So once again, it's extremely complete and clear. Furthermore, I would like to thank the Managing Board for the visit this morning to the Technology Center. Many shareholders appreciated the visit. It was a wonderful introduction. I have 3 questions, don't I? First, your cost-saving program. Was there a reason not to start it sooner? Because in 2013, you adjusted your outlook. And don't you think that would have been the point in time to start the potential cost-saving? Of course, we're very pleased with that. But you could have started that then and then cash in on it. Second question, your fundamental approach to make sure that your Swiss vitamin A production can become more competitive, because you said that the Swiss franc may drop a bit and the prices may recover, but we don't really think that's very probable, so that might justify more draconian measures. Third question. The materiality index on page 24. That's a very clear figure. The climate change renewable energy seems to have more potential than the bio-based economy. And what is the background? Because we thought it would be precisely the other way around. Thank you for your 3 very clear questions. Feike, you have the floor. Thank you. First of all, cost-saving program. Let me just comment on what I said just now. This past year, if you look at DSM from 2010 right up to 2015, halfway 2015, if you will, we've been concentrating on divesting businesses and acquiring businesses. And this change in portfolio required a lot of our attention. And ultimately, it's borne fruit because part of our product portfolio is such. Well, let me put it differently. I'm happy that we don't have the elastomers, the melamines. We had a strong position in the beginning of that period, but we don't have it anymore. And I think most of shareholders will appreciate the fact that we're still in nutrition and not in bulk chemical products. And so we reshuffled the portfolio in that period of time quite fundamentally. And it's always a bit of an issue if you're concentrating on selling and buying businesses to also start a large efficiency program in nutrition. You are integrating bits and pieces, you're making sure that everybody is in the right position. And so then we said, okay, we're just going to stop our acquisitions for a while. That'll give us some space to concentrate on efficiency in nutrition in all our regions, in all our operations. And actually the same holds true for our supporting services, because if you have a very differentiated portfolio with all these different elements, all these different businesses that all require different kinds of attention from the supporting services and corporate services, it's very difficult to harmonize everything and to join it all together. With the portfolio that we have right now, we said, okay, we're a different kind of company, and we can join all supporting services. That's a very tricky process because all these business groups insist that they're quite different from all the others and that you can't do that. Well, that's what they said. Nobody's saying that right now at DSM anymore. But it's always a bit of a tough process. But it's easier if you have a clear portfolio, if you know exactly what you want to keep within the company and what you don't want. So in the beginning, it was very difficult. And I think it would have been very difficult to start these programs sooner because actually we were concentrating on different things. Vitamin E. How can we become competitive again? Well, we are competitive. You say no. Not good enough. Well, that is a qualitative judgment. Quite relative, I must say, because I think that we have one of the best cost prices of vitamin E in the world. You can see that, and we've said that with these declining prices, the newcomers in China will have quite a bit of problems. And we're quite right in that, because the smaller players in this market, of course, the market was great for them when the prices were really high. And they thought that they could enter the market even though there were small players. But we're still making a good margin on vitamin E, even though it's not as high as it used to be. But it's very good. It's still one of our top products. So we're not performing badly. And to pick up everything in Switzerland and then to relocate it to somewhere else, that will cost a couple of billion. And then you'd have the same problem elsewhere. I don't really think so. I don't think that would be feasible. And to try to change the exchange rate of the Swiss franc, I don't think we can do that. So what we're going to do is concentrate on the costs. Those prices won't always be low. I think that things will change, and we have to differentiate our business, make sure that we're more and more tailor-made, make tailor-made products, etc. Specific question is, why don't you leave Switzerland? And a couple of billion, I mean, given the assets that you have on your balance sheet, it doesn't seem to me. I mean, that's quite high. And then staff, that's something different, because that requires time. Mr. Siebesma, I think I'm not exaggerating if I say, let me see if I can get the support of my colleague, Mr. Tanda. But I really think that if we look at our country operations And if we look at Ciesling and Lanza, for instance, I don't know exactly how much, but we're not talking about a couple of 100 million. If you would pick up everything and then relocate it from Switzerland, we're talking about major numbers, perhaps even billions, which, I mean, will never be worth it, and it wouldn't be sensible at all to do that. Or am I saying something completely wrong, Stefan?
It's not. I would add one point.
It's such a fine colleague.
I would add one point that actually the labor cost as part of the total cost of goods of vitamin E is a very small portion. You realize these are highly automated assets, very capital-intensive assets. So we are the lowest cost producer in the world, and the labor cost, and therefore the impact of the Swiss franc is not that strong. Raw materials are priced in dollars. We sell in all kinds of different currencies in the world. So our impact from being in Switzerland is more related to the headcount we have in research and development, business management, not the vitamin E manufacturing. Yeah. And it's also an integrated train. We start in Visp in the Oberwallis, where we start at the cracker, and then have a whole chemistry tree that makes vitamin A, beta-carotenes, vitamin E. So you would indeed talk billions of investment.
En ik zou ook geen overhaaste beslissingen.
And I wouldn't take any hasty decisions based on currency movements. I mean, things can change from one day to the next. And your last comment about our materiality matrix that reflects, as you said, whether or not there are important trends that have an impact on the business, on the company. We have 24 important elements that we've stated, and you say climate change and the business impact on DSM, you say that you believe it's much higher than the bio-based economy. I'm sorry? My question was that your estimate of the impact of climate change to be higher, and I would say for the longer term it's the other way around. Well, that's an interesting challenge, because yes, it's debatable. It's all a matter of the horizon that you use for the materiality matrix. The way the bio-based economy is developing right now, and that's also got to do with the fact that we don't have a CO2 pricing, and we have a low oil price right now. And so now for the business impact of DSM, the effects of bio-based economy are much lower than the effect on climate change, because our paints, coatings, engineering, plastics are already benefiting from that right now. So in the short term, up to 2018, I would say that the effect of climate change and addressing that has more of an impact on the business than the bio-based economy. If you would say, well, let's take a longer term view and look towards 2025, 2030, wouldn't the bio-based economy have just as big an impact? Then I think I could agree with you to a certain extent. Sorry, I didn't realize it was up to 2018. Well, yes, well, we haven't been very specific, so we could improve on that, and I'll take that point on board very seriously. Excellent discussion. Thank you very much. Next point. Good afternoon. My name is Michiel van Es. I work for Robeco, and today I'm also speaking on behalf of Achmea Investment Management, Goudse, and Menzies insurance companies. In 2015, DSM took a number of important steps. Mid last year, you announced the plans from your strategy update. Now, we're very pleased with your strategy. The planned cost-saving program is necessary in order to improve cash flow. We encourage you to do that. The streamlining of operations and strengthened focus on EBITDA, etc., are the right choice for DSM. DSM wouldn't be DSM if you wouldn't pay attention to sustainability. The strategy update says that the EcoPlus product should be positioned very clearly and that there are clear targets regarding sustainable energy. And here, once again, we agree with the strategy of DSM, and you deserve a compliment for that, for those plans. At the same time, we would encourage DSM to continue on this track, and we call on you to take a critical look at the composition of your portfolio and to continue to streamline your operations. Furthermore, the value of the business nutrition can be enhanced should you focus more on the high-end value products as compared to the bulk products. In terms of portfolio and strategy, I have two questions. First of all, could you perhaps explain the interest that you have in the portfolio or the plans that you have for the portfolio for the next few years in Sinochem and Patheon? And then I have another question about the innovation cluster. What is your business case for this cluster at this point in time? And the low oil prices, do they have an impact on the biofuel venture with Poet? A comment regarding the conditions for the preference shares. DSM initially for this AGM, modification in the Articles of Association have been proposed for this AGM in order to freeze the returns for these shares for 5 years because they were linked to the interest rates that are rather low now. For us, the initial proposal didn't seem to be a solution for the long term, and we thought it was a missed opportunity to revise these instruments and to align it with the initial capital contribution. We appreciate the fact that DSM has withdrawn this item on the agenda and is committed to put this on the agenda again in due course and to come up with a proposal that all stakeholders can agree to. We would like to engage with you on that. The voting rights are not in line with initial capital contribution. We would call on you and appeal to you in your proposal regarding preference shares category A to also look at the return conditions as well as voting rights. And we hope we can get a best practice proposal that can be defended in view of all the interests of all the stakeholders. I'd like to hear from you on that, and I'd like to compliment you on the annual report. It's very clear and informative for shareholders, and furthermore, we appreciate the fact that DSM has followed the guidelines for GRI and also the integrated reporting framework. And furthermore, DSM has published its tax principles in the report. With these guidelines, as far as we're concerned, DSM is a front runner as compared to other listed companies. Nonetheless, I would like to encourage you for next year because we would like you to introduce a breakdown for nutrition in your reporting, which is now 2/3 of the EBITDA. Those are my questions. Thank you. Well, that is quite a long stretch of questions. Thank you very much for your kind words and compliments. Good to hear. I agree with the chairman. I counted 8 compliments, 2 questions, 1 response, and 1 recommendations. So that is less than 3 questions. I mean, it's just 2 questions. So I agree with you. And I agree with the chairman. Thank you very much for your kind words. I really would like to repeat them, but then again, that's a bit lame. I appreciate it. 2 questions. So what is it that we want to do with the joint venture with Sinochem and JOL Patheon? One in pharma and the other one in antibiotics with the Chinese and the other one with the Americans, and to make drugs for the large pharmaceutical companies. Both joint ventures. Now, we want to pull out of these 2 joint ventures in due course, and for both joint ventures, we will choose the appropriate time. We want to be very cautious in our disclosures in this respect because we don't want to create all sorts of effects in the market that won't benefit the company. Of course, we want to get the best possible value. Things can happen very quickly, may take a while, but ultimately that is the strategic objective. In the meantime, we are working on the performance and profitability of both joint ventures, and we're well on track, by the way. Mr. Tanda is supervising both operations. Then if we look at our innovation center, which is your second question, are we on track there? Well, we have 3 important new businesses that we are developing there. Biomedical last year was impacted somewhat by the consolidation of the biomedical market, particularly in the US, and growth was affected there. But now we see that those consolidation effects have died down, so we've continued with our consolidation. We're growing in this first quarter. We see that biomedical is recovering, is growing again, and our solar cell operations are also growing well. They're very small, but our biofuel operations, indeed, as you said quite rightly, are being affected by the low oil prices. But the prices for the second-generation biofuels made from agricultural waste are not from food stuffs. Those prices are good in principle, but this market is developing, and we would like to issue licenses but things are evolving more slowly than we would have expected. I agree with the VEB. If you look at a longer-term view, it's quite inconceivable that the world would not engage more in bio. And ultimately, I agree with that. It will happen, but we need to be patient. Your comment regarding preference shares, yes, it is indeed on our agenda. We put it on the agenda, in fact, because we understand full well what the situation is for the cumulative preference shareholders, and we really wanted to address this situation. And initially, we thought that our proposal can count on broad support, but ultimately we found out, as you said, that the situation was more complicated. So we said it might be better to just withdraw it from the agenda, to take our time and think things through thoroughly, to see how to move forward, and then to come back to the matter in due course. So that is precisely what we will be doing. You said something about voting right and that it's inappropriate, etc., etc. Well, I don't want to respond to that about what is good and what is appropriate and what not. But the things are simply the way they are right now. And the world is the way it is, and that's, often the case. And if you want to change something, you have to see whether everybody agrees. And that's precisely what we're going to do. So thank you. Yeah, this is an example that we're really listening to all shareholders in this particular case. And we will continue to reflect on the matter. I just want to change something in the meeting. Are there any other questions about preference shares? I prefer to address those questions now than to spread it across the entire meeting, that we don't have a separate item on the agenda. My name is Van Riet. I'm a private shareholder. Could you tell us what the difference is between the different voting rights and the ordinary shares that are listed at the stock exchange? Dave, can you explain? My name is Dave Housing. Good afternoon. Investor Relations, DSM. Yes, thank you for that addition. DSM has two classes of shares nowadays. We have the ordinary shares, those are the shares that you hold, and then we have another class of special shares, those are preference shares. These shares were created at the time, 1996, when DSM was being privatized in 3 sections. And the last part was the listing, and the last tranche could not be issued as ordinary shares. They're the special shares. Now, what's so special about these shares? These shares have a fixed value, so they cannot be traded at the stock exchange. These shares do qualify for dividend payment that is based on interest rates, and so it's not a compensation based on profit. So we have 2 different classes of shares. The cumulative preference shares, in fact, are shares that receive an interest rate compensation. Now, the problem nowadays is obviously that the interest rates are extremely low. Oh, of course, I agree with you, but they were issued at a very, very low rate. The par value, I believe, was 70%. It was 70% of par value. At that point in time, the Dutch government wanted to get rid of the last tranche of its shares and then considered what the options were to issue those shares, running a risk of a share price decline, or come up with a different solution. And the Dutch state came up with this solution, and Dutch shareholders loved that idea because they voted in favor of it by 90%. And I think that day the share price increased by 8%. So this is something the shareholders wanted at the time, and all the implications thereof, the voting rights and everything, are simply implications of decisions taken by shareholders. And by the way, I think it was a very sensible solution because it was one that made them a lot of money. But looking back now, perhaps in hindsight, I would say that we should have done things differently. That may be the case. But anyway, this was a resolution that was passed. I wasn't there at the time, and I think that the decision was taken in a well-considered way. Yeah, you say you've got these shares that are based on interest rates, and now the interest rates are low, but they used to be really high. Well, you have your ups and downs, don't you? You're quite right about that. That happens in life. I'm not here to defend the preference shareholders or to say anything on their behalf, but I would like to mention the facts. They're very illiquid. There's no market for it. And they don't have the benefit of share price increases, so you can't really get rid of those shares very easily. So if you look at the interest rates or the dividend of those comprefs, that's also the reason that we understood and empathized with the holders of these comprefs, because they have an instrument that is illiquid, that will not benefit from share price increases. And ordinary shareholders do have that. But they do have the dividend, the preference dividend. The dividend is low now, but they also have preferential right to the dividend. They get dividend when we don't get dividend. Yes, but that never happened. But things can change. You yourself said that everything can change. I agree, things can change. I don't know, but once again, I'm not here to defend the interests of the compref holders. But I wonder whether they would get very excited about getting a dividend if DSM goes bankrupt. I don't think that's a reason to be extremely happy. No, I agree with you. I don't think that that is what they're hoping for. Thank you very much for your questions. Excellent debate. Are there any questions about this subject? Yes, questions about preference shares. No questions on preference shares. I'll hold you to it. And then we can proceed to the next item on the agenda. My name is Frank Altena, and today I am representing the VBDO, the Association for Investors in Sustainable Development. VBDO, established at Utrecht. The vision of VBDO is to strengthen the understanding of sustainability and performance of companies and investors, and we believe that the members of VBDO have about 500 million euros invested in AEX funds. Now, we have comments about sustainability. Actually, I only have 2 comments, and I also have a couple of compliments and further explanations, if I may. VBDO would like to compliment DSM with the fact that sustainability is entrenched in its strategy, and you're presenting a very clear, integrated report. Progress in terms of transparency regarding tax issues must also be mentioned, because this is a spearhead that is a recurring item, and for the very first time we don't have any questions about this year. We do have 2 questions that are not so much related to your performance in the past year, but questions relating your targets for the future. First of all, your renewable activities and circular economy. Page 54, for instance, there is research on alternative materials such as bio-based fuels, and we would like to hear more about the impact in the near future. And this is leading to the question whether DSM is prepared to establish objectives and targets for the use of alternative renewable fuels and to report on that over the next few years. Second question concerns natural and social capital. Natural capital is considered to be a very important factor in creating value within DSM, and DSM is attempting to limit its ecological footprint as much as possible. On page 22, we read about natural capital, the world as an interconnected system of resources. Page 35 refers to the valuation of natural and social capital, the outcome being a balance of positive and negative effects. For instance, you write about a pilot project, Oatwill, within the Natural Coalition platform, page 69 and further, and we believe this is a very, very positive development. The question is, does DSM intend to carry out such evaluation of natural and natural and social capital for all relevant products? Thank you very much for these kind words, your compliments. Will we report on everything we're doing in terms of sustainability and renewables? Yes. Well, we are on that track right now, and we have established a target for 2025 for our renewable energy that we want to use 50%, and obviously we'll be reporting on that. and reporting on the headway we make here. We're already reporting on the products that are bio-based, and we indicate that per product. We report, and we'll continue to report, on the products that are Eco Plus, and these are products that clearly have a lower ecological footprint than similar products of our competitors. And we have in excess of 50% of these products right now. And we're reporting on what we do in terms of circular economy, for instance, our approach concerning solar cell coatings. That's just one of the many examples. There are different ways that you can report on these issues. Well, these are the 4 methods that we're using and the 4 things that we're doing. Now we're not really looking at whether we can report more, but whether we can align our reportings with other players in the industry so that competitors of ours can report in a comparable way or in an adjusted way so that things become more comparable. That would be more convenient for you if companies report in a comparable way. That way you can compare companies, which I believe is quite tricky right now because there are no clear uniform standards, and the only standard that we have is the GRI, and we try to apply it as much as possible. And that really ties in with your next question concerning social capital and what we call People Plus. Since this year, I'm looking at Focko, who's over there, we've been reporting, and Jacobine, we've been reporting on this matter, and we will be increasing our reporting on it. And you can also find it in our targets now. We will also be specifying which 4 criteria we see an impact of our products on society, which is quite unique. There are very few companies that do that, and we're engaging with other companies, and that'll take more time than our ecological footprint. But we are trying to align with these other companies. And through the World Business Council of Sustainable Development, we want to take a lead, once again, because I think that it's more convenient for you to compare companies, and it'll make our lives easier as well, because we really want to continue to be a front runner. And thank you very much for encouraging us. Are there any other questions at the back of the room? Thank you, Mr. Chairman. I would also like to congratulate DSM with a very extensive and detailed annual report, very clear, with a focus on changes within the field of operations of DSM. I have a couple of questions, 3 questions, in fact. First and foremost, this is something that I read in the news, and this is a partnership with Syngenta. Syngenta is something that is a hot topic for environmentalists, and this has got everything to do with pesticides, ground up, as we call it in the Netherlands, but also the substance that is used to kill the leaves of potatoes and onions, for instance, in order to be able to harvest these products in an easier way. DSM is a supplier, I understand, of a new basic product for the basic product that Syngenta wants to use in the agricultural industry. And does DSM feel responsible, and will DSM make any arrangements? And I'm talking about the ecological effect and also spreading the product in the fields and particulate matter that we might be affected by. Is DSM going to make any arrangements on the matter? My second question. Worldwide, we see a consolidation. I read this somewhere in the newspaper. Part of the slaughterhouses, the pig slaughterhouses in the US, has been transferred to a Brazilian owner. Now, my question is, because you've got the food chain, and somewhere in the food chain in the US and in Brazil, DSM has operations, and so what is the impact on nutrition? Is anything changing? Do you expect any changes? My last question, the province of Limburg has asked questions in connection with the fact that last year, in trying to increase ROCE, to try to do so by making some people redundant, even here in the province of Limburg. So my question is, do you have any provisions for that, and can I find them in the annual accounts? Sorry, what was the problem in Limburg? The province of Limburg is engaging with DSM, or wanted to talk to DSM, due to the fact that DSM wishes to make 1 out of 7 employees redundant. And my question is whether you have made provisions for the fact that DSM... Yes.
Wat die eerste vraag betreft.
Yes. I can't say anything about Syngenta on their behalf, but I give the... I mean, what kind of reply can we give to that question? Yeah, I am certainly not speaking on behalf of Syngenta, but on behalf of DSM. I think the product that you were referring to was actually a Monsanto product. Roundup is a Monsanto product, and I think the whole political squabbles around that relates to Monsanto. Now, Syngenta, of course, is a competitor, but using other products. Now, what we're going to do with Syngenta is exactly what you refer to. What we want to do is we want to deploy our biotechnological knowledge, and that's why Syngenta approached us, in order to protect crops biologically, organically, naturally. In other words, to stop fungus and everything by using the right kind of organic products instead of chemicals. And fix exactly with the whole subject. And that's what we're doing together with Syngenta. We're doing research together to see whether we can develop it. As yet, we do not have a product, but we are collaborating to see whether we can develop something in that respect. Now, killing pigs in America. Stefan, over to you. You're the man who knows all about that.
If I understood the question correctly, it was about Brazil. Brazil is one of the most competitive countries in agriculture in general. Crops can be grown there at very low cost, both corn and soy, and those are of course grown to be used as animal food, as the basics, and then we supply micronutrients like vitamins, minerals, amino acids, enzymes to convert that food for the animals that feed very efficiently. Now, there are very large companies in Brazil active in the animal nutrition area, in raising animals, making protein, but the United States is also a very large country where that is the case, and sometimes you have combination of businesses, like DSM buys companies, some of our customers buy other customers. That is a normal activity in the business, and the larger the customer, the more sophisticated they are about using products, about really understanding what impacts the health of the animal, what impacts the feed conversion. And therefore they are good customers, but we also deal with smaller farmers and develop products that are applicable to smaller farmers. So Brazil is a very important area for us. The takeover of one customer to another really doesn't impact that.
Thanks, Stefan. En dan uw laatste vraag over...
And your last question was about our cost savings program and its impact on employment here in Limburg. Well, I think, you know, the VEB and you are taking the program from both sides. And the answer is, yeah. Well, of course, it does have a major social impact, but what we're trying to do is that if you look at the benchmark, we have a pretty solid social plan in place in the Netherlands and for our employees in Limburg who may lose their jobs. We really do a lot to find other employment. And if you look what we do in Venlo, when we shut that down, just about everybody got a new job somewhere else. So there is a social plan in place. And let me say that what we did in Limburg has been a development of Camelot. We don't want to set something up which is just going to fade away. And in the last years, it's something which is flourishing. It is, before we had DSM, and of course it grows and costs are reduced. But of course, what it meant is that we managed to keep jobs, not necessarily in DSM. Peter, I'm quite sure, knows it better, but I think we've got about 10,000 people working on that site who aren't employed by DSM. That's what we've been doing this last years, and that's how we've been able to mitigate, excuse me, the effects of losing jobs. From the room, thank you very much for your very extensive answers. But I have two questions that you still haven't answered. You said you were going to use natural organic products in crop productions or crop protection products, which weren't going to be dangerous for the environment. But of course, it all depends on how much you dilute it. Think of a natural project like Digitalis. If you don't add enough water to it, you die. So, quite honestly, what is really important, it's all very well that you say it comes from natural organic sources and can't do any harm, but that's not really true, is it? Because what we really need to know is what these kind of products that you are developing will impact on the environment. And my question, is there enough money set aside to ensure that people can be accompanied if they lose their job? Thank you. Well, has money been reserved? Yes, there are provisions for that, of course. And each time where it becomes clear that we know what we're going to be doing in the future, then we take a provision. But you can't take a provision if you think that maybe sooner or later something's going to happen. It's only when you really flesh a plan out that you have the right, on the basis of accountancy rules, to set money aside. And that's what we've been doing for some time. The first question that you had, that you're not wholly satisfied, or I think you should be pretty much satisfied with that, because we do that very, very cautiously. And of course it is true that it's not because something organic doesn't necessarily mean that it's safe, and if you say chemical, it doesn't necessarily mean it's dangerous. But what we are doing is looking for safe organic solutions. And generally speaking, most people think that organics are better than chemicals, but they're not always right. Next question. My name is Smanjard from Amsterdam. Now, I have to say that I think it's really interesting that you're going to try and do something about methane and cows over and above CO2 emissions. So methane, that's an interesting approach. But my question that I have from your annual report, I look at key dates and I see that I look at, how good is DSM? I always thought it was a brilliant company, but when I see that the staff assessment of DSM seems to have dropped by a point. In 2014, it was 70%. In 2015, it is 69. Do you think 2016 is going to see 70 again? Are you making your staff happy? Because surely the happier the staff, the better they work. So that's my first question. And my second question, in this third part of that page, you've got net profit, and that's dropped. It was 154 in 2014, and now it's 88. That's 39 point something percent down. I weep when I hear that. And then I look further on. Cash from operations has also dropped. What are you going to do about this? And then the dividend. That proposal is good, but when I see that in 2014 it was 78 cents, and then we move forward 33% lower, 45 cents. The speaker gets a bit confused here, but then he moves on to something a bit clearer and talks about partnerships. Now, I did understand from the presentation that 210 million flowed from these three partnerships. How does that break down? Is it 50, 45, 35%? Oh, how does that work? Oh, sorry, 50, 49, and 35 million. And then I see you've got 67.85% of a partnership. Why have you got that? And then we've got the second partnership. That was 92 in 2014, and then it's increased to 191 in 2015. Was it too expensive to buy knowledge and expertise in? These are my questions, somewhat confused from Mr. Spaniard, but we do hope. The second question will be to our Geraldine. Geraldine, net profit has dropped. Of course, that's not our aim, is it? Geraldine, over to you.
Good afternoon, everybody. I'm afraid the translators struggled to follow your question on the financials, but I'll do my very best to answer some of the key points. Now, indeed, you correctly point out that our net profit went down last year. Now, you may recall in the presentation by Feiker that there were a couple of headwinds last year. The big one was vitamin E, where overall for the year we had 100 million down. So in nutrition we went down. But we also last year, and it's very important, we also carved out our polymer intermediates, caprolactam, businesses as well, into a new joint venture. Now, when you do that, you have to adjust the value on the books of those businesses, and that creates a one-time impact. All of these things put together actually impact your net profit. So if you really want to understand how well the business is doing, it's very important to focus on the line continuing operations, because there you have a proper like-for-like comparison. So I really encourage you to have a look there. And typically, to your question on the cash flow, which is the other one that I think was translated correctly, you said our operating activities generated less cash last year. Well, again, if you look at the continuing operations, our cash flow went up from 663 to 800 million. So really, if you compare what we still have and what is the future of DSM, it was more profitable and cash generative. But it was a bit of a mixed year, and when you deconsolidate big parts of the company like we did, which accounted for 2 billion of turnover, it does make reading the financial statements a little bit confusing. So apologies for that.
And then he had one question, Geraldine, about the dividend, which is not stable. I didn't understood the question because the dividend is stable, but I don't know whether you
I'm
understood.
afraid I struggled there.
I think there is, ik weet niet wat u precies bedoelde.
I don't know what exactly you meant by that, but Mr. Spaniard is not speaking into a microphone, which of course complicates matters more than somewhat. EPS, not dividend.
Similar answer to the net profit is that when you deconsolidate again, you impact also the earnings per share. So there is a line, earnings per share, continuing operations, and even before exceptionals, that is the most relevant comparison, and there we're doing fine.
Met andere woorden, als de dividend is gelijk gebleven.
So the dividend stayed stable, it even increased. And if you have quite obviously, if the net profits go down, then EPS also drops. Other questions? Yes, we are busy with methane emissions from cows. That's what we're trying to do. The clean cow, cleaning up the fore and the well, backside fits very well, doesn't it? Now, if you put certain products in animal feed, you can dramatically reduce the methane emissions. Our total herd here in the Netherlands produces 20% of the greenhouse gas effect here in the Netherlands. Then the staff happiness has dropped from 70 to 69%. The engagement result, well, it is a drop, but it's a very marginal drop. It doesn't mean that we are absolutely delighted that it's like that. No, of course we're not. We do realise that we at that time when we were conducting that survey, we were reorganising the company, and of course when we were talking about saving money, and that creates a great deal of disquiet in the company. People want to know what's going to happen. But I think that it shows that the figure is pretty much remained constant. And the fact that it remained constant, and we don't want to boast, of course, but it's not a bad figure, really, given all the transformation that the company was going through. And of course, we do hope to ramp this up to 75% engagement from the company. The 245 million coming out of the joint venture, out of the 245 million, that's ours. That's our part. So if you take 50% and 49% and 35% from the third, and you add them up, then you get 245 mil. And the rest, of course, is the three other parties who share that. So once again, the 245 million is ours, or rather yours. Now, and the rest, why did we increase it? Why did we increase in the partnerships? Couldn't we have done that ourselves? No, it wasn't necessary in the partnership, but I have to say, to start with, we weren't doing it right. We had a major factory in Yushu in the north of China, and in the beginning, when we started partnership, we just didn't get it right. And in the first year, it cost a great deal of money. And now everything's working fine, but it did meant that it cost us some money to start with, but profit is increasing. And we're trying to do better. I think we did a very good deal. We put to Beijing and our pharmaceutical activities, Pathian and ours worked really well. The market saw that, everybody recognized it, and by coming together, we do things better, and we've got a much bigger client base, and we have a really unique base to work together. We are a unique supplier, so I think it's a really sterling combination. Those are the reasons. Could I thank you, says Mr. Spanier, for all your answers. Van Riep, I'm an individual investor. You want to get rid of the antibiotics in the long term. Why is that? Is that something that's not going to be used in long term, or do you think? I mean, penicillin, after all, has got to a saturation point and is seen as being negative. So that's your view on antibiotics. And you think as well, you're talking about natural fuels, biofuels, and a combustion engine working on biofuels. But are you doing something else? Are you looking about electric cars, for example, using your solar panel knowledge? The answer. we want to get rid of antibiotics because we said it's not a business where we're going to grow, because we want to grow materials and nutrition, not pharmaceuticals in a small antibiotic production. So that's the reason we want to get rid of it. Penicillin, I don't think that penicillins have reached the end of their life cycle. I think they've got a long way to run still. It's one of the most effective broad-spectrum antibiotics in the world. If you've got some unknown infection, you take penicillin, you've got a good chance to knock it on the head. Now, of course, you can run a number of expensive tests, but if you haven't got the money for that, and most of the world doesn't have the money for that, then it's very helpful. And look in the West. We use a lot of traditional antibiotics, amoxicillin, with clavulin acid. So I don't really think that it's coming to an end. But I don't think it's going to be worth a fortune when we get rid of it. This combustion engine with natural fuels, of course we still believe in it. And I think if you look at biofuels, and our biofuels have got 80-90% CO2 emission with respect to normal fuels, and this is the easiest way, indeed, to render our society more sustainable. If you look at solar panels and electric, you need huge infrastructural investment. But if you can mix biofuels with normal gasoline, that is really the quickest road to sustainability. And we want to move fast. And you're quite right. We are also investing in solar cell technology. We believe that there's a future in all these alternatives, and maybe we're going to need more technologies in the future in really to move to a truly sustainable development. Here's my third question. We are. Do we have our own brand in paints, or do we just supply ingredients to make paints? Well, we have both, is the answer. But we're different of order of magnitude. We are a supplier of for all major manufacturers. We give them resins, and they mix it with pigments, and they make a coating from it. But what we've seen, especially in bio-based resins, that we are moving with the market. We've got a number of biologically based resins, and really, you can't, you shouldn't underestimate the value of these. We've got a water-based resin now, a baby paint we call it, and it's totally volatile organic compound free. And we're keen on introducing that ourselves because we've managed to develop our own paint, and we introduced it in the market with Praxis here, a big DIY market here in the Netherlands. It's very small. It's just right now, it's just a beginning, but we think this particular segment should grow very fast. It's good for the environment. It's good for people. But actually, for the main part, we are just suppliers of ingredients. But you can go to Praxis and buy this. We don't want to discourage you. You can go into Praxis, and it's called Perfection. And it costs €20.99. What, for 1 litre or 5 litres? That's a good question. And I bet you've got another, a whole bunch of other really interesting points. Anybody else on this particular point? Yes, over there. Chairman points. I understand that the VEB doesn't normally come with only 3 questions, but I have a financial question. Should I come later or now? Let's do it now. The first, why has revenue growth stagnated in China? There seems to be a problem there. There's a great deal of investment. Why are things not working out there? And India as well also seems there's some problems. is there a blind spot with India? And then I've understood that DSM I'd understood that we'd been demoted to the silver class in the DJ Sustainability Index, but you showed us there in the gold. What happened? Is it true that we didn't get to gold, and what would happen if we didn't? And then another question. Can you make an estimate about annual investments in the People and Planet programs outside of the product portfolio? Marketing, publicity, or whatever. What are those costs, more or less, per year? And where can you find them? In my financial questions, costs have increased by 13% overall, which is a great deal more than turnover. Even, of course, turnover corrected for currency impact. So what's the reason for that? And the very, very, very last question. In the long-term incentive plan, in targets, 50%, excuse me, is linked to greenhouse gases and energy emissions. Now the company has changed so drastically that we've kicked out bulk chemicals. Don't you think that would mean that there should be less weighting here? Because, of course, greenhouse gases and energy have surely got a much smaller impact now that the business has changed. China, down. India, down. No, it's not quite what I said. I said a blind spot. Well, and China has stabilised rather than growing. Well, yeah, well, India actually did drop a bit, so it's like why? Well, it's a change in portfolio. In China, we were really big in caprolactam, big players. And we had to deconsolidate that. We still got the turnover, but that's in our joint venture now. And we got 35% of that. So you don't see that anymore in the turnover. And antibiotics activities in India were big. They still are big, but they've been deconsolidated as well. And we've got 50% of the joint venture over there. Now, we're growing well in both countries, but not that we could compensate for these direct deconsolidations, and that's why it's what you've seen. Now, I mean, where did you see this silver? Well, we're a tiny little, we were just for a few minutes. Jacqueline, you probably know. What's the percentage difference from gold to silver in percentage points? It was some time, a long time ago, they had a measurement and they found that you can discuss whether or not they did the right measurement right. But anyhow, we are gold now, that's for sure. And we are top class in the DJ Sustainability Index. You can't discuss it. It's our yearly investment in People and Planet, that's marketing and PR costs. That hurts because what we say, we don't book it as costs. We've got an integral yearly report. What we do is good for profitability, and also it's good for society as a whole. I don't really know how you can split it. If you see what we do in terms of sustainability, sustainable paint, and Dimitri is doing about the greening iPads, and when I see what Stephen... No, but that's not what I asked. I mean, obviously, it's clear what you have to do, but I'm talking about outside your portfolio of products. when you talk about your own reduction in greenhouse gases and energy, these are investments that don't necessarily pay back a great deal, but you, of course, set targets for them. The answer from the CEO, yes, what we reduce here in-house, yeah, it's energy reduction very often, and when you reduce energy costs, you save money. But we don't actually have figures for this, and there aren't many anyhow. We are working with the World Food Programme. Does that cost money? The answer is yes. Do you earn from that directly? No, probably not, but indirectly, most probably. People recognize us because of our partnership. So people and planet is really wholly integrated in the way we run our business, and I don't really see it as a separate part of corporate social responsibility or anything like that. It's, and the last question, it says the web, we're not against that. We're not that against that, but you know, you're doing so well in that, but how much does it cost you? Maybe you get such bang for your buck that you should do more. Yeah, no, says the VEB, you've done an enormous amount. You've really put DSM on the map with all these partnerships around the world. When I hear that it only costs 10 million, then it's a miracle. And if you say, can we spend more? I'd say yes. But it's a question of what you can do and what the possibilities are. The answer. It's very difficult to quantify. I don't know whether Geraldine has any good answers here, but are there any major investments that we do which has no financial payback, where you can't see any financial effect and only a sustainability effect? I can't think of any big investments which are purely and solely aimed at sustainability and when there's no payback. I look at Jos over there. Jos, he's the controller.
Speaker speaking off mic.
Jos.
Jos Ophey.
Jos Ophey, corporate controller. In every investment, what we do is we look at it, whether we can add something, we can reduce greenhouse emissions. So for every investment, what we do, we see whether we can add things in order to increase the returns of DSM. Well, this automatically takes us to the last question, no, the penultimate question, because Geraldine will be commenting on cost increases. So the penultimate question, in the LTIP, you are referring to energy and greenhouse gases. And yes, what we did, or what the supervisory board rather did, or actually what the shareholders did, because you approved the LTIP some time ago, we said, okay, part of the remuneration of the directors should be variable. Of course, that can be a point of debate, but lots of companies do that, short-term and long-term. And if the remuneration is going to be variable, you could in part link it to financial targets, but you could also link your variable pay to what you're doing in people and planet, and that is precisely what we've done. And I think it's sensible to move towards the future, because I think we could say, in view of the improvements in the portfolio, you might wonder whether we shouldn't fine-tune these targets. And recently we have done precisely that. So we adjust the targets from time to time. Mr. Kiss is going to confirm today that even retroactively we have fine-tuned our targets, or some of our targets. And as a managing board, we said, okay, go ahead and do that. Well, that's quite something. I think it's also fair to say that we don't want to change the system every year. We want to keep it stable. Every 3, 4, 5 years, we would look at it again, review it, and adjust it. But this gives us a good reason to take a different perspective. I apologize for referring to marketing, but a gold medal Dow Jones index is so important to shareholders and investors. Well, there's an added value to that. Mr. Siebesma, I agree with you entirely. The cost savings, Geraldine.
Your statement is absolutely correct. As was mentioned, our revenues went up 10% and our EBITDA went up 4%. So between the costs went up more than the revenues. Now, if you have a look in those figures, the revenue went up 10%, but 8% came from foreign exchange.
Yeah.
Now, we have a different currency mix in our revenues and in our cost base. And to make it simple, we have a lot more US dollar in our revenue, and the US dollar went up, which is very helpful for us. We have a lot more Swiss francs in our cost base. So already you have a currency mix difference, which is going to eat up in our margin. And the other element, which has been referred to, is the loss of profitability on vitamin E last year. So if you want to simplify that, basically it translates into a lower margin for the company, and you'll see that that came mainly from nutrition, that went from 19.6 to 16.6. So that's where you see the biggest disconnect between top line growth and bottom line growth. And that's the business that had both of these elements in. So,
but that is clear. But I looked also upon marketing and general cost.
In there, don't forget, we consolidate as well all the different costs in different currencies within our company. So some of it may be absolute cost, and others could be translation.
Thank you very much.
You're welcome.
Dank voor uw vragen.
Thank you. I hope that the answers were informative for you. Can we proceed to the next item of the agenda? Well, apparently we can. So let me tell you first that I have some information about the turnout. I can inform you that today at this meeting we have 837 shareholders present or represented. A total, they're representing a share capital of 120,848,034 shares, being 55.4%, 41% of the share capital that has been issued that is entitled to vote. And the civil law notary has received a number of proxies for the resolutions and voting instructions. These proxies concern a total of 86.4 million shares and represent 71.49% of the capital represented and present here at the meeting. These votes have been introduced in the electronic voting system. So now we can proceed to item 3, which is the implementation of the remuneration policy of the Managing Board 2015. Mr. Kiss, the chairman of the Remuneration Committee, will be explaining the implementation of the remuneration policy of the Managing Board 2015. This explanatory note is based on the information for the remuneration policy that you will have found in the remuneration report and the explanatory notes to the financial statements. After the presentation, you will once again be given the floor to raise questions. Ewald. Good afternoon. This is my annual report on what we did last year in terms of remuneration policy. We've got the slides in English, but I'm sure you'll find this on the website as well. DSM is a very international company, which is why we're using the English language. So the remuneration policy was approved in 2010, and we applied some changes in 2013. And this policy is applicable as we speak. There are 3 principles that we're guided by. First of all, we remunerate on the basis of all stakeholders, not only shareholders, but we take into account the interests of all stakeholders, also including people, planet, profit concept. We want to remunerate fairly. We look at benchmarks, and we want to approach the median in the market. And there's also a guideline for the Managing Board that they should hold DSM shares, and this runs parallel to your interests: 3 times the base salary for the CEO and 1 time for the other members of the Managing Board. The system at DSM consists of 3 things: a fixed salary, short-term variable remuneration. I'm not going to use the word bonus because it's part of the ordinary remuneration: short-term variable compensation and long-term compensation. The base salary was not increased last year, and this upon consultation, this supervisory board and the managing board, this seemed to be the best thing to do. We were right in the middle of a restructuring process, and so it's not a bad idea to set the example. If we then look at the short-term incentives, this is the schedule. Just to refresh your memory, 50% are financial goals, EBITDA, cash flow, sales growth, and the other 50% sustainability elements, EcoPlus, safety, employee engagement index, and there are also individual targets for the individual members of the Managing Board. So, what have we done in terms of the short-term variable compensation? You may know that if they achieve all their objectives, they can earn 50% of their base salary, and if they do supersonically well, they can even earn 100%. This past year, the year under review, they realized 60%. This is just over and above the target, which means that we feel they did well. The profit EBITDA was just above the target. The cash flow was also above target. Only sales, net sales, was behind target. And our sustainability goals usually were on target or above target. And in the individual goals, of course, these are individual goals for the individual members of the managing board, were all at target or above target. So this ultimately led to 60% of their base salary. Once again, an excellent performance. Now, we've got something new at DSM. Part of their short-term variable pay must be converted into DSM shares. In other words, at least 25% of this compensation should be spent on shares, and they can even go up to another 25%. It's good to hear, and I'm sure you'll be pleased to hear that all members of the managing board have converted the maximum of 50% of their short-term incentives into investment shares. We call them investment shares. And there's something else that's quite interesting, because in 3 years' time, if they achieve the 3-year performance targets, they will be given an additional matching share. This is another incentive to link the short-term compensation with the long-term remuneration. Now, the LTI, long-term variable pay, and the schedule at the bottom of the slide shows how we structured this. This is quite unique for Dutch companies. 50% are financial goals, and the other 50% are sustainability goals. Now, this is quite unique. You don't run to this very often, and this is precisely part of our DNA. The 50% financial and the other 50% sustainability goals. The financial goals are total shareholder return, TSR, so that is benchmarking our numbers, and then a 25% return on capital employed. And then the sustainability goals, well, we talked about that just now, the greenhouse emissions, CO2 emissions, and energy efficiency. And if you ask me, you didn't ask me, but should you ask me, I think this is a great breakdown, 50-50, and I wouldn't change it. And I think it will be up to the new remuneration committee to review this and to see whether this is the proper ratio. Now, let me look at the top end of this slide. If they achieve the long-term targets, the members of the managing board can make 100% of their base salary, and we will reserve a number of shares, and that will run for 3 years. For the CEOs, 29,000 shares, the other members, 19,000, so they will run for 3 years. And at the end of the 3 years, we will see in which measure they have achieved their long-term goals. We have to look back as well. Last year, we looked back on the past 3 years. So that started in 2012, 2013, 2015, 2014. And the result is there that they didn't achieve their financial targets, but they did achieve their sustainability targets, which means that they made half what they could have made. So that's good to know. So this relates to the previous 3 years. And then, last but not least, I have a small change to the long-term variable pay. We've got a CO2 emission element, and as DSM we said we want to make it more challenging because you learn as you move along, and we all agreed that we should make our targets somewhat more challenging. So this is the new schedule that we've agreed on, and this is for the fans. I mean, you can read all the details in our annual report. Then, We dedicated another 6 pages in our annual report to remuneration. I'm not going to repeat that. Pages 107 and further, you can read all the details. So this is my short report on what we did last year, and obviously I'll be happy to answer any questions. Thank you. Are there any questions for Mr. Kist? Yes, thank you very much for this presentation. By the way, we're quite positive about the change in weighting of the financial goals for the incentive. There's more focus on cash flow and EBITDA. This is in line with the strategy. The non-financial targets, performance targets, seem to have made an important contribution to variable compensation. We're very much in favor of sustainable performance targets in remuneration policy, but at the same time, we don't have a lot of information as to how these targets are being measured, particularly because the targets of greenhouse gas were adjusted. I have 2 questions regarding the implementation of remuneration policy. Could you perhaps explain the targets about the non-financial targets, how are they being benchmarked, and how will the Remuneration Committee make sure that these targets are challenging enough? That's an excellent point. Thank you. I won't be able to tell you all of this, and we will have to ask for the help of experts. But the issue is that they have to be verifiable, and usually the auditor validates these targets. And the only thing that we reviewed whether these targets are challenging. As I said, we made them more challenging. And if you want to know exactly how we do this, and I'm sure that in the annual report there's a lot of information, but here in the room we, I'm sure, have experts who know everything there is to know about that, so I won't answer that question. And I'm very pleased that you say that this breakdown between financials and non-financial goals is a breakdown that you agree with. It's a bit tricky because lots of shareholders say, no, it's all about the financials, and always want us to reduce the soft a bit. So I'm glad that you say that you're very pleased with it. What are we going to do? I can say if you have several questions, we may want to ask the people here in the front row. It's very difficult to benchmark this because every company is different, has a different structure with a different portfolio, and the benchmarks don't really tell you all that much. Here we look at what our emissions are, what our emissions could be over a number of years, how we could reduce that, and then we take another look at them internally, see whether we can make them more challenging. This is an interaction between the divisions and corporate. And then there's the supervisory board that takes another look at this in order to fine-tune the target. So that's how the targets are established, and then we link them to our own plans. A comment off mic, the interpreter cannot hear the question. Well, our external auditor will also take a look at all these numbers in terms of verification. Are there any other questions? Okay, well, by the skin of your teeth. And I must say, we must thank Mr. Kist for all the energy he has been putting into DSM. 12 years as a member of the Supervisory Board, and for many years he was chairman of the Remuneration Committee, which is not the most enviable position nowadays, I would say, so thank you very much. Okay, so this takes us to the next item of the agenda, the financial statements of 2015, which we're putting to the AGM. The financial statement 2015 has been approved by the Supervisory Board on the 29th of February 2016. You'll find these financial statements and other details as from page 124 of the annual report. Who of the shareholders would like to comment on? Well, the financial statements have been audited. You'll find the opinion of the auditor on page 129. Auditor, Mr. Verst, I'd like to give him the opportunity to say a few words about the auditing work of KPMG. Should you have any other further questions, we'll be happy to answer them. Good afternoon, ladies and gentlemen. My name is Erik Verst. I am the external auditor of KPMG, and I am responsible for auditing DSM. I would like to give a brief presentation on our audit and the auditor's opinion pertaining to the audit. And my presentation follows the the structure of the opinion that you'll find in the annual report. 2015 is the first year of our audits at DSM, and for that reason, we have dedicated additional time to the audit. The transition of the audit, for that reason, has been one of our key issues in our opinion, and I'll be discussing the details in a couple of moments. We have audited the consolidated and the single annual accounts of DSM, and we carried out work regarding the sustainability report. My presentation concerns the opinion concerning the financial statements. The end product of our audit is the opinion, and we issued an unqualified opinion, which entails that the financial statements give us a fair picture of the financial situation and that the financial statements and the annual report are in line, and this all in accordance with IFRS Part 9 of Book 2 of the Civil Code. In our audit approach, we focused on a number of key elements. First of all, risk assessment. During our audit, we carry out a risk assessment focusing on those areas where the risks of errors in the financial statements are the biggest, and usually this concerns the larger items. Materiality is also important in order to establish the magnitude of our work. At DSM, the materiality for the financial statements amounts to 25 million euros, which is 5.2% of the result before exceptionals and 0.3% of sales. And by the way, we report any deviations that exceed 1 million to management and the supervisory board. In view of efficiency, we will select the audits that we do centrally and the work that we do more locally, particularly goodwill acquisitions and divestments, taxes, litigation, and exceptional items are audited centrally as much as possible. In a number of countries that we have selected, the local auditors will carry out work for the benefit of the group audit. For the consolidated entities, this would be KPMG accountants, and for the important non-consolidated entities, and Feike has referred to them in his presentation, DBX, DSP, and Chemica Invest, we have other Big Four accountants. Joint venture DSM is audited by KPMG. Furthermore, most countries, there are mandatory statutory audits, and these statutory audits are carried out in part by KPMG and in part by other firms. The foreign auditors report for group purposes and work under very stringent instructions. We assess independence and competencies, and we engage with them very, very frequently regarding the audit, and we will evaluate their reports. Significant foreign DSM organizations and auditors will be visited by the central team periodically. In 2015, there were several countries, as stated in our opinion, that were visited. And these were organizations in the United States, in Brazil, Switzerland, China, and India. In complex issues, we will involve our internal specialists. That would be specialists in the field of IT, taxes, and pensions. And then, finally, the key issues of our audit. Throughout the year, we're involved in auditing DSM. We discuss our findings with Geraldine and Feike quite periodically. We attended all audit committee meetings, and we attended the supervisory board meeting on one occasion. We reported our findings in writing throughout the year and at year-end. Regarding the key issues in the opinion, we've issued extensive reports to management and the supervisory board. These items have been included in the opinion, given their financial significance and complexity of these issues for decision-making. Transition of the audit to KPMG has been a key issue of our audit because the transition of an auditor in a large international company such as DSM requires a lot of time and attention on our part. We spoke to the previous auditor, EY, and took cognizance of their reports and their files. And in the audit for 2014, which was carried out by Ernst & Young, we were present at important discussions between DSM and Ernst & Young. Furthermore, we visited a relatively high number of foreign operations in order to get a good picture of DSM and to be able to instruct our colleagues in those countries properly. Furthermore, all the KPMG accountants reporting to us were invited to the Netherlands in September 2015 for a 2-day introduction into auditing DSM. Just as last year, goodwill, divestments, and deferred taxes receivable were key issues of our audit in view of the magnitude and the assessment of management that is required in that respect. And by the way, these estimates are within acceptable bandwidths, which is precisely what we stated in our opinion. Furthermore, exceptional items have also been referred to as a key issue given their separate classification in the profit and loss account and the magnitude thereof. That concludes my presentation, and obviously I'll be happy to answer any questions. Thank you very much for your attention.
Dank de heer Beurster voor zijn toelichting.
Thank you very much. Now you have the opportunity to put questions either to the external auditor or questions about the financial statements of 2015. Would anybody like the floor? Mr. Dekker.
Een paar korte.
Yeah, a few short questions. In your auditor's survey, did you approach things in a different way to your predecessor auditor company? Or do you think you did it the same way? I'm looking at checking IT systems. Did you do the same way as the auditing company before you? Second question, does DSM have any influence on the choice of who audits the joint ventures? That seems to me quite important. Or is it the majority shareholder who decides on the joint venture selection of an auditor? And my next question, how many hours did the partners spend auditing DSM? You probably know that. My last question. I'm really looking at the managing board for this. Were there any recommendations in the management letter this year coming from you? Well, I think, was there any different approach, Mr. Wurst? The answer from the auditor. I would think it's very similar to the kind of approach that we do with other major companies. What you do a little bit extra is that you really have a very close look at every item that has risk involved, and you want to cover the whole board with that. And continuing to other issues that you raised, in the audits that we carry out with DSM, we spent 24,000 hours. When you know DSM, that's what we would expect to spend. So the first year, 40,000 hours, a lot more, but 24,000 probably when we know DSM really well. But that is what we pretty much calculated, because the first year you're auditing a company, you really have to get to know the company really well. If you want to ask for the hours of the partners, we've got 4 partners, myself and 3 others, and I spent 400 hours. My colleague partners, who are auditors, spent 700 hours, and another partner who tried 250 hours, but he is responsible for IT. Of course, we've got a lot more partners who are involved from outside the Netherlands. Is that enough? Yes, I give in. That is enough. Yes. And the joint ventures now. Well, the answer to those questions regarding the auditors for the joint ventures, I think they're chosen by the different boards in those joint ventures. And I think if you've got a 50-50 breakup of the executive board, then maybe it's a casting vote. Now, in the CVC, we don't have a majority, so there's a discussion in the board. I'm looking at Dimitri and Stefan here. I don't think we've ever had any particular conflict or arguments about anybody wanting a different auditor than we do. We've always managed to come to a unanimous decision in the selection of auditors. What about China? What about China? Well, says Faker, you can imagine with the Chinese, but not only with the Chinese, with Western people as well, Europeans. Then not everybody thinks in the same fashion, but actually we didn't have a problem there. I actually think that Sinochem paid good heed to our advice in this respect. I had a 50% share, and I had a blocking possibility had I so wished to do so, but it never arose. With respect to recommendations, do you want to say something to that, Geraldine? We don't have a series of recommendations coming from the auditor's report. Of course, we can always improve things. Would you like to say anything?
Sorry, if you wouldn't mind clarifying your question, was it, did we get a management letter? Or?
Of course you get a management
yes.
letter. My question was, of course, what were the most important, let's say, how do you call it, issues to handle.
Yeah, I think, thank you for giving me the floor, because this gives me an opportunity to firstly thank KPMG, our auditors, for having invested a lot of hours in making sure that this transition worked well. So Eric gave you an insight into the amount of work, but it was a very competent team as well. Now, in terms of the learnings, and of course in the first year where we work together, there always are some. One of the hardest topics when you are carving out activities and placing them under the control of another group is to get that transition well done. And I have to say, time is always too short than one would like. So one of the main management letter points was to make sure that when we have these kinds of transactions that we anticipate as well as possible. And not that there was any disagreements, it was just a fact that it was a challenging exercise. And as to the others, I would say they are the usual areas of attention that auditors spend a lot of time on, which are usually to do with forward-looking estimates. So the past is pretty clear. It's what is coming next. So when you're looking at valuation of joint ventures, of goodwills, etc., where there's space for interpretation, that there the more we are aligned into the kind of methodologies we want to use, then the easier it is to come to a joint conclusion that everything is okay.
I was always thinking, for instance, recommendations regarding cybersecurity or IT, solidity of IT systems, and then you get an investment after such a risk.
Yeah, absolutely. I mean, cybersecurity is something that I think all corporates are battling with. We didn't get a particular highlighted recommendation on that, other than, like everybody else, we have to be very careful and diligent at keeping up our efforts to make sure that we are safe.
Okay. Thank you.
Dank u wel. Is er nog andere vragen?
Anybody else out there who'd like to ask a question? Otherwise, we can move to voting for the adoption of the financial statements. Could you just explain how things work? Now, I guess you probably know how this works, but could you all pick up your electronic box and put your smart card into the slot with the gold chip facing towards you? Now, if you put it in right, you should see your name on the display. If that's not the case, please put your hand up. If you don't see your name, well, all is looking good there. Rosie, we're going to vote. Let me just recall how it works. You've got 3 buttons, 1, 2, 3. If you are in favour of the resolution, press on 1. If you're against, 2. And if you'd like to abstain, press on 3. And you will see a indication of how much time you've got to cast your vote. Chairman, would you like to say anything before we actually vote? Everybody's got share, has 1 vote. And you will see at the end of the day who's voting for, who's against, and abstentions. An abstention is actually cast as a non-cast vote, so you're going to see percentages at the end of the day for and against. Thank you, Chairman. Can I ask the operator to turn the system on so we can vote on item 4 on the agenda? And here we go. Once again, 1 is for, 2 against, 3 abstention. This is to vote on the adoption of the financial statements. There you go. You can't vote anymore. So the ballot is closed, and you're going to see the results. 405 million and very little against, so that's 99.64 in favour. Well, that's a very clear result. On the basis of the outcome, this has been accepted, so I note that the financial statements for 2015 have been accepted. Can we move on to 5A, reserve and dividend policy for 2015? And also let's go into 5A to start with. Reserve policy and dividend policy. The reserve policy is unchanged compared with last year. The reserve policy is closely linked to the dividend policy. The dividend that the company, DSM, pays its shareholders depends on business conditions, the company's financial performance, and other relevant factors. DSM aims to provide a stable and preferably rising dividend. The managing board, with the approval of the supervisory board, may propose that the dividend will be distributed in cash or in ordinary shares of DSM at the discretion of the shareholder. Would anybody like to take the floor over this? I see that nobody wants to do this. Then we can go to 5B. This is the adoption of 2015. On the financial, you can see that in 2015 there was a net profit of 88 million on the basis of the Articles of Association. The Executive Board, with the approval of the Supervisory Board, determines how much of this will be reserved. No reserve for 2015. So after the cum prefs have been paid, the distribution will be 10 million. The managing board has decided to add to this 210 million out of the reserve, so there are 288 million in all, which are to be distributed to the AGM. So 1.65 euros per share to be distributed as dividend, taking on board what has already been paid out in August 2015 of an interim dividend of 0.55 cents per ordinary share. The final dividend will be 1.10 euros per ordinary share. The period where the choice can be made to be paid in stock or cash will be from 5 May 2016 to 18 May 2016 at 3 p.m. 40% of the total dividends in the forms of shares can be paid this year in order to avoid negative tax consequences for DSM. If shareholders in total wish to receive in aggregate a distribution in shares which exceeds this, those shareholders who have opted for distribution of former shares will receive their stock dividend on a pro-rata basis, with the remainder being distributed in cash. You will be able to find everything in the agenda in explanatory notes about the payment of the dividend, and this will be paid out ex-dividend as of, or will be paid as of 24 May 2016. Any questions? Thank you very much, Chairman. I hear that a maximum of 40% of the total dividend can be paid out as stock dividend in order to avoid tax problems. Now, is that new, or has it always been the case? The answer, I believe it's always been the case. Any further questions? Then we can move to voting. First of all, on dividend. This is the adoption of the dividend for 2015. Please vote. You can see you need to vote now. Thank you very much indeed. I close the voting on this, and we should have a result. 99.1 in favour and 0.9% against. Once again, this the dividend for 2015 has been adopted. We move to agenda item 6. First of all, release and liability of the members of the managing board. You can vote on the discharge, first of all, of liability for the members of the managing board and then supervisory board. The release from liability of the managing board. If there are any questions that you'd like to direct there, then we will vote. 6A, release from liability of the members of the managing board. Please vote now.
Daarmee is de stemming gesloten.
Okay, the ballot's shut. Could we have a look? And we see that indeed there is adoption of release from liability of the members of the managing board. Congratulations, the managing board. Now we can go to the release from liability of the members of the supervisory board. That's B. That's 6B. Could we vote on this? Please vote now before the vote closes. Thank you very much. I close the voting. Can we see the result? Yes. Once again, 99.26% in favour, 0.74% against. I note that the release of liability has been granted to the supervisory board. One correction, and a question from microphone F, that 40% that can be converted into shares is a novelty.
Yes, that's correct.
Okay, could you talk to that?
To the question that was asked about the 40%, sorry, there was a time delay. We would like to clarify what that exactly means. So the limit of 40% is not for each and every shareholder, a limit of 40% getting the dividend in stock rather than in cash. It's in absolute that we will be limiting it to 40%. So last year, for example, it went up to, I think, 45, 47. It was a bit higher. But of course, it depends on individual choices of all the shareholders. Now, should there be more than 40% of overall dividend selected as stock, you will get the maximum possible up to 40%. Because it could be that 95%, if you have chosen to get in stock, will be in stock, and the rest will come in cash. So it should not have a material impact on anyone choosing stock. And the reason this was introduced was in order to limit the charges, and there's particularly a fiscal impact on the company if we exceed that level in the next 2 to 3 years. In the future, if we can take it away, we will. But at this stage, it's to protect the interests of all shareholders.
Okay, excuses als ik daar verwarring over heb veroorzaakt.
Yes, thank you very much. I'm sorry if I caused confusion there. Please go to the microphone if you want to put a question.
I'm looking to my colleagues. I think it was between 40 and 50, if I'm not mistaken. 45, 48, it varied a little bit. Yeah, nearly the same, exactly, not materially different. Yeah.
Okay, Vraag hiervoor aan.
Anybody else? Is it mainly foreign shareholders who want the stock dividend?
Yeah, were there mainly foreign shareholders?
I don't know.
What we're seeing, let's say, with the stock dividend, that you see a broad uptake of stock dividend across all our shareholder base. So there's no particular area that you can say it's either only in Europe. So we typically see that almost half of our shareholders have taken, let's say, stock dividends.
Thank you, Dave. We go to agenda point 7. En dat heeft betrekking.
This relates to the reappointment of Ms. Kennedy and Haynes as members of the Supervisory Board. 7A, you can see the reappointment of Ms. Kennedy as a member of the Supervisory Board. The Supervisory Board proposes Ms. Kennedy to be reappointed as a member of the Supervisory Board on the basis of her broad and in-depth nutrition knowledge and her qualities as a Supervisory Board member as demonstrated during her past period as member of DSM Supervisory Board. Mrs. Kennedy is an independent member of the Supervisory Board within the meaning of the Dutch Corporate Governance Code and the Supervisory Board regulations. The reappointment will be for a period of 4 years and will terminate at the AGM in 2020. Any questions? And let's vote. I open the voting over 7A. Please vote now.
Dank u wel. Dan sluit ik de...
Thank you very much. I close the voting and we see the result. You see that 99.63% are in favour and 0.37 against. Congratulations, Mrs. Kennedy. You have been reappointed. I'd like to extend my congratulations to you. Well done. We now move on to 7B, reappointment of Ms. Haynes as member of the Supervisory Board. Supervisory Board nominates Ms. Haynes for reappointment as member of the Supervisory Board on the basis of her broad and in-depth applied technological knowledge in the fields of materials science, also life sciences and biotechnology. Her international business experience and her qualities as a Supervisory Board member as demonstrated during her past period as Supervisory Board member. Ms. Haynes is an independent member of the Supervisory Board within the meaning of Dutch Corporate Governance Code and Article 1.4 of the Supervisory Board regulations. This also would be a reappointment for 4 years and would terminate at the annual general meeting of 2020. Any questions? Let's vote.
Eén vraag? Okay.
One question. I beg your pardon. Please go to a microphone. Is there a yearly assessment? Yes, there is a yearly assessment made of each Supervisory Board member. I do that personally on a yearly basis, and every 3 years we have an external, a third party who comes to assess the performance. So you are continuously under review as a member of the Supervisory Board. Problems are resolved immediately. Everybody seems extremely pleased about that. So, could we please vote on 7B, reappointment of Ms. Haynes? Please vote.
Dank u wel.
Thank you very much. You see the result now. We can see 99.29% for and only 0.71% against. Victoria, congratulations. You've been reappointed. Then we come to the appointment of Mr. Pant as a member of the Supervisory Board. We propose appointing Mr. Pant as a member of the Supervisory Board of DSM with his extensive knowledge and experience. Could you please stand up, Mr. Pant, to show yourself? Once again, yes, we suggests his appointment because of his extensive knowledge and experience of bringing products and services to markets across territories, in particular in the Asia-Pacific region. He will contribute to key areas of DSM's development, as well as to the further internationalization of the company and its boards. Mr. Pant is an independent member of the Supervisory Board with the meaning of the DCC and Supervisory Board regulations. Any questions about his appointment? Please go to a microphone. Yes, thank you very much. Just one very question about this new appointment. So, I would really like to know how many other places on supervisory boards Mr. Pant has. I'm quite sure that Mr. Pant, would you like to talk to the number of supervisory boards places you're in, you occupy? If you'd be so kind as to go to a microphone, that would be very helpful.
I sit on 2 supervisory boards in India, and am an advisory board member. It's not a supervisory board, but an advisory board member of the Singapore Management University.
That's clear. Now that he's standing, are there any other questions for Pradeep? No other questions, then we go to the voting procedure.
Oké, dan nu de stemming over punt.
All right, let's go to vote on 7C. Please vote. Thank you very much. 99.98% in favour, only 0.2% against. Congratulations.
Obviously, you don't have enemies in as well. De heer Pant is daarmee benoemd als laat van de...
Congratulations, Mr. Pant. You've been appointed. Well done. Now move to item 8 of the agenda. Remuneration of the Supervisory Board. The last increase of the members of the Supervisory Board was decided in the AGM of 2012. There was a long discussion about that, and we promised you that we will wait for 3 or 4 years before coming back to that, and that's what we've done. But every now and again we check whether or not this is compliant with what's in the market. At the beginning of this year, there was a benchmark that we carried out, and it shows that currently our fees are relatively low compared to peers. So the idea is to increase the remuneration. You can see in the explanatory notes of the agenda what has been proposed, because obviously we really need to retain and attract highly qualified international supervisory board members. Would anybody like to comment on this? If that is not the case, then let us vote. Voting on item 8. Please vote.
Dank u wel, de stemming is gesloten.
Vote is closed, and we now see the results on the screen. And we see that out of the votes that have been cast, 99.66% has voted in favour and 0.34% against. So I confirm that the meeting has approved the proposed remuneration of the Supervisory Board, and we can proceed to 9A, which is the extension of the authority of the Managing Board to issue ordinary shares. The General Meeting on the 30th of April 2015 has extended the authorization to issue ordinary shares and to restrict or exclude the preemptive rights, as extended to a duration of 18 months, and this authorization will therefore end on 30 October 2016, if not extended. It is proposed to extend the authorization of the Managing Board to a date 18 months from the date of this General Meeting, so 2017. So should the Managing Board decide to issue shares, such a decision will be subject to the approval of the Supervisory Board. Item A of this item on the agenda concerns the authorization to issue ordinary shares and rights to subscribe to ordinary shares. The proposal is to restrict this authorization to a nominal amount in shares that is equal to 10% of the issued capital at the moment of issuance, and an additional 10% of the issued capital at the time of issue, should the issue take place in the context of a merger or acquisition within the scope of DSM's strategy, as published on DSM's website. Are there any questions? No questions. So we can proceed to vote on 9A. The vote is open on 9A, and I would request you to issue your vote, to cast your vote, rather.
Bedankt. De stemming is gesloten.
Thank you. Vote is closed, and we see the results on the screen. 91.53% has voted in favor and 8.47% against. I confirm that the meeting has approved the authorization of the extension of the authorization of the Managing Board. Second section, 9B, extension of the period during which the Managing Board is authorized to limit or exclude the preferential rights of issuing ordinary shares. And this authorization concerns the exclusion or restriction of preferential rights when issuing ordinary shares, including the rights to subscribe to ordinary shares. Last year, the authorization was also granted, and that will end on the 30th of October. And just as in the previous point, the proposal is to extend this authorization with 18 months up to and including the 29th of October 2017. And once again, such a resolution would be subject to the approval of the Supervisory Board. Just as in the issue of shares, it is proposed that this authorization be restricted to 10% of issued capital at the moment of issue, an additional 10% of the issued capital at the moment of issue, should the issue take place in the context of a merger or acquisition in accordance with DSM strategy. Do you have any questions? No questions. We can proceed to the vote. The vote is open on 9B, and I would request you to cast your vote. Thank you. We see the results appear on screen. 78.65% has voted in favor and 21.35% has voted against. Item 9B has been adopted. 10, that is the authorization of the Managing Board to the company repurchase its own shares, and the corporation can purchase its own shares pursuant to a decision of the Managing Board, which is subject to the approval of the Supervisory Board. And for that, this requires the authorization of the AGM, and such an authorization can only be given for a maximum of 18 months. At the AGM, it is proposed to extend an authorization to the Managing Board to purchase its own shares, as referred to in Article 13 of the Articles of Association, by means of purchase at the stock exchange or otherwise for a period of 18 months, to be calculated as from today up to the 29th of October 2017, up to a maximum 10% of the issued capital, provided that the capital will hold no more shares in stock than at a maximum of 10% of the issued capital. Furthermore, the authorization concerning the purchase of ordinary shares, the price will be between the nominal value and the opening price of the stock exchange plus 10%. And as far as the cumulative preference share, a price between the nominal value and the basis for calculation in the Articles of Association plus another 10%. The price range enables the company to adequately repurchase its own shares, also in volatile conditions. The authorization of the Managing Board to repurchase its own shares may be withdrawn by the General Meeting of Shareholders. By granting the proposed authorization, the previous authorization will be discontinued. I assume there are no questions. There seems to be one question. Off mic. My name is Van Riet. How do you establish the value of the cumulative preference shares if there's no trading on the stock exchange? How do we establish the value of the Compref shares if there's no value, trading at the stock exchange. Well, here comes the specialist, Kees Los. My name is Kees Los. I work for the legal department. The value is specified in the Articles of Association. That is the nominal value. No, 5.29. That is what is stated in the Articles of Association. That is the value that has been attached to these comprefs. That is the basis in which we look at that. So they don't have a nominal value. Yes, they do, of 1.5. 1.5 euros. Yes. So if it's plus 10%, that would be €1.65. No, 10%. 10% on 5.29. So what would that be then? What would that add up to? I would say another 53 cents. I don't think they'll be prepared to sell them up for that price, but we'll have to wait and see. Thank you very much, and we can proceed to the vote. Thank you. The vote is open for agenda item 10. I would request you to cast your vote. Thank you. The vote is closed. And we see the results on the screen. 99.97% has voted in favor and 0.03% against. So that way we have adopted this section. 11, reduction of issued capital by cancelling shares. To issue shares, for instance, in connection with the exercise of the option rights annually granted to DSM's management and personnel, may lead to a dilution of share capital. To the extent that DSM's financial position should allow this, and the possibilities therefore should exist in the stock exchange, the disadvantage for holders of shares will be offset as much as possible by purchasing and possible cancellation of shares in DSM's own capital. The authorization to repurchase own shares was discussed under item 10 of the agenda. So here we're dealing with the capital reduction. As a consequence thereof, the managing board proposes that the AGM should decide to reduce the capital up to a maximum number of shares that will be purchased or repurchased by the company, and therefore the company will be able to further optimize its capital structure. The amount of the capital reduction will be established by the managing board and is limited to a maximum of 10% of issued capital as appearing from the financial statements 2015. The decision will be shown in the registration of such a resolution in the trade registry. Are there any questions? I shall open the vote for the last time on item 11. I would request you to cast your vote.
Dank u wel. Sluit ik de stemming.
Vote is closed. We see the result. Isn't that wonderful? The best score to date. 100% of the votes that have been cast is in favor. Thank you. Thank you for your support. Ladies and gentlemen, let's move on to any other business. Microphone F. Thank you, Mr. Chairman. I forgot to state my name. Could you speak up, please? I forgot to mention my name, José van Haastrecht. I have only one question. It's a leap year this year, and we have the Olympic Games. Do you know how DSM will position itself to support our athletes? I really don't understand the connection with the leap year. Well, we can confirm that it's a leap year. We're not going to issue a press release. And I think that for 6 to 8 years, we have supported the Dutch Olympic team, the athletes, with our products and our innovations. And a couple of years ago, I think it must have been 2 years ago, we stopped doing that. And we are now concentrating on other things. So we're not. Well, some of us may be attending the Olympic Games, but as DSM, we won't be clearly present at the Olympic Games in Rio. Microphone A. The Managing Board. Can the Managing Board comment on or share its ideas on DuPont and Dow will be merging, and they have similar operations. Now, what is the view of the managing board of the effect on the global market? Well, of course, we're never going to comment on specific companies other than that everybody should speak for themselves. Of course, changes in portfolios, consolidation and deconsolidation movements are quite common in our industry. We have engaged in that ourselves. We have bought and sold businesses, merged companies, demerged. You see that happening in our industry. We understand that the intention is that these two companies join forces and then separate again, but we'll have to wait and see what will happen. Any other questions? Question off mic. The interpreter can't hear.
Doet DSM iets aan de recycling van
The question is whether DSM is working on the recycling of plastics. Comment off mic, the interpreter can't hear.
Oké. Ja. Er wordt gerefereerd aan een Nederlandse vinding.
There's reference to a Dutch invention that collects all the plastic soup in the ocean. This is the ocean cleanup initiative of Bayan Slat. We're very familiar with this initiative. And the question is whether we can support this initiative some way or other. And Dimitri will be able to tell us more because he's involved with plastic cleaning operations. One of our growth drivers is sustainability, and quite specifically the circular economy, that you use the end product as input for your raw material. And we've just seen the presentation on Niagara. Niagara actually is the reverse of again. So if you see Niagara, it means again and again and again. So it doesn't only involve plastic, but it involves all the commodities and raw materials that we use. So we convert them and we use them again. We don't only do that with plastic. We do that with carpets, and we try to do that in a good way. Plastic in general entails a number of requirements, particularly in the automotive industry. You can reuse part of the plastic. That helps, and that helps us grow as well. So we're very active, and it's part of our DNA as a business, not only plastic, but in everything we do in materials.
Verder nog vragen?
Any further questions? Yes? My name is Roya. I'm a small shareholder from Maastricht. I have a question about TTIP, actually two questions. Are you in any way, directly or indirectly, involved in the negotiation process? And second, what about TTIP? Do you think that would be positive or negative? And what would the impact be on changes of standards and so on and so forth? Well, of course, we're not directly involved in TTIP negotiations other than by means of different associations, both in the Netherlands and in Europe. And of course, our voices are heard in these associations, but we're not an involved party. Obviously, the government has the mandate for that, but businesses are heard, their voices are heard. And in general, we think it's a good thing that we have as much trade as possible without inhibitions and without any obstacles in the Netherlands or Europe and worldwide, and we would support these initiatives in Asia. And we're not afraid of different standards and our products. It's not that they are they have less certifications or in the United States, or that what we put on the market in Europe is better than elsewhere. So we follow a standard, and we don't just work for parts of the population. So there are no differences. So I do understand the different procedures in different countries. To harmonize all that, I think, would be a good thing. Any other questions? Okay, we can proceed to close the meeting. But before I close the meeting, I would just like to take a moment to concentrate on the fact that this is the last meeting with Ewald Kist, who has made an invaluable contribution over the past 12 years, a contribution to DSM and in general. Ewald was always very involved at DSM, very passionate about the company, and has helped us greatly with his wise advice. So thank you, Ewald. But before you leave the room, the minutes of this meeting will be made available within 3 months of this meeting, will be posted on our corporate website. Please hand back your voting set and your card, and we've got drinks and a bite ready. So looking forward to meet you over drinks, and we'll also be looking forward to seeing you again on the 3rd of May 2017, which will be the date of the next AGM. Thank you very much for coming, and the meeting is closed.
Thank you.